Welcome back. I hope you're having a fantastic day. We're going to take a look at Bitcoin in the markets, including cryptocurrency, and the markets are struggling today. As we've been talking about, inflation and Fed policy are the biggest risks out there to the market, as well as the war in Ukraine. Fed officials came out today and said they're going to shrink the balance sheet $95 million a month with 60 or 95 billion a month, with 60 billion of that being treasuries and 35 billion being mortgage-backed securities. With rising interest rates in the housing market, with treasuries rising, the 20-year note rising, the 10-year note rising, mortgage rates are rising at a rapid pace and a record pace. And then with the Fed selling mortgage-backed securities, that's also going to increase rates, as well as potentially tighten credit in the mortgage market, make it more difficult to get a loan, which is going to ultimately impact the housing market as well as commercial real estate. So we're going to keep an eye on that. Other news in the market are the effects of the war in Ukraine on the economy. Janet Yellen came out today and warned that the war in Ukraine will have enormous global impact. Obviously, we all know that. It's putting pressure on energy prices, putting pressure on food, creating a global food crisis. The longer this war goes on, and the more the energy costs continue to rise, and food supply and supply chains are cut off, eliminated, and constricted, the more expensive it's going to be to produce, and inflation is going to continue to be a problem. So the Fed is going to have to fight even harder. So in addition to the balance sheet runoff, the Fed is definitely going to raise rates at least a half a point. The markets had not priced all that in before. I know a lot of people thought that they had. And again, the markets are now trying to price in that half a point rate hike in May and another half a point in June, and could potentially be even higher depending on where inflation stands at the time, what the economy looks like at the time, and labor market, things like that. The Fed is seeing a strong jobs market, strong economy, so they think they can tighten significantly into the economy without creating a slowdown or a recession. So we'll just have to see if that's the case and if they can actually pull that off. So lots of things to watch. Again, the pandemic is still a problem in China. They have locked down, so that's going to affect supply chains, going to affect prices. The war in Ukraine, interest rates, and the Fed balance sheet are just a few of the things that we are watching from enough economic headwinds and risk facing the economy out there. Just checking my notes, make sure I covered all of that. So those are the things right now that are weighing on the market. And then Bitcoin specifically is down today, and it's continuing its sell-off here after the rejection of the 200-day moving average. This is the top line of the channel that we've been kind of following, looking at the wicks. That's the 200-day moving average that comes in right at the top of this channel line here. If you're using the wicks, we've been looking at it as well off of the daily close, and we brought this trend line down here and we tracked daily close, and it looked like one of the things that we were watching is if price could stay above this line here, it could continue on. It has now broken below this trend line right here off of the daily close. So now we can expect price to track the bottom of this and go check the bottom of this channel right here. And if we draw it off the daily close, then the bottom of that channel is going to come in somewhere around $40,000. If you go with the wicks, then it's going to bring price in probably more around that $37,000 range, which would kind of make sense based on these wick lows here, but your closes are obviously a little bit higher than that. So it could wick back down. Our last wick low was right around that $34,000 range. It could put in a wick low here at the $36,000 range, but close up around $39,000-40,000 as it continues to march along in this channel here before any kind of a significant downtrend or sustained downtrend. So let's look at something else. So the moving average, this is the 50-day moving average here. The green line, the blue is the 100, the red is the 200. Price got rejected right at that 200-day moving average. If we look at traditional markets, that's where traditional markets have faced resistance, is that 200-day moving average. That's a big critical technical level for traditional markets as well as crypto. Right now, the S&P is just now breaking below the 200-day. It had been above it for a while, but NASDAQ is back below the 200-day. Dow Jones is back below the 200-day and continuing to put in these lower highs. So traditional markets are continuing their downward trek as well. Tech is in real trouble today. If you look at the markets, they opened up down and then rebounded a little bit at noon, and they're accelerating the sell-off into the close, with the NASDAQ down about 2%, S&P down 0.9, almost 1%, Dow Jones down about 6%. NASDAQ was down, I think, at about 3% at one point during the day. So we'll have to watch that acceleration into the close, about 20 minutes left till the close, to see how that finishes out the day. So let's get back to the charts here and let's take a look at this moving average, because there's something I'm tracking here. So this moving average cross here, whenever the 50 crosses up, well, whenever the 50 crosses down below the 200, obviously that's your death cross, the 50 and 200. That was our first death cross. We tracked our bottom, call off of that at that $36,000 bottom level, which is held so far and probably looks like it could potentially hold for this current trend and cycle that we're in, this range that we're in right now. It may not break below that again, but we'll just have to wait and see if that holds up. If any kind of a major economic event happens, if the war escalates, you will see markets sell off very quickly. And depending on what degree of escalation we're talking about, the markets will react accordingly. If nukes are used, markets will sell off in a big way. And if we get into a nuclear conflict globally, well, it's not going to matter anyways. You might as well go to cash and have some fun, because that may be the end. But if we just end up with NATO getting involved and it becomes a World War III situation, but not nuclear, then markets will sell off on that news, but then they will ultimately come back, just like we saw with the initial attack, invasion. When Russia invaded, markets sold off, but they rebounded quickly. And what we saw was our relief rally. That's what we've been through here in Bitcoin, as well as traditional markets. Now they're rolling over again to continue to digest the effects of the Fed interest rate hikes, the inflation, the China supply chain, all of the things that are weighing on the economy and putting pressure on the economy and putting pressure on discretionary spending. And again, this 50-point rate hike is what they are in the process and the balance sheet runoff of pricing into the markets now before the next meeting. But the effects of the effects of the inflation, the effects of the war and all that is not priced in the markets yet. So we'll have to wait and see. So back to this 50-200, that was the initial death cross. There's a 50-100 cross. And when it crosses down and crosses up, markets, generally decline and rally off of that. So whenever the 50 crosses up above, up above over the 100, markets tend to be on the rebound. And when it stays above all moving averages, that's when you're generally back into bull market conditions. So the last time we had that cross up was over here in August of 2021, had a little rebound, had a drop, and then markets moved again, had the down cross here, downward cycle. And then when you go back and look at previous times where this has occurred, right before the pandemic, March 2020 crash, the 50 crossed up above the 100 and markets were on the way up again. After the crash, crossed up again. And of course that was, bull market on. And if we go back to 2018, 2019, or 2017, 2018, bear market, the 50 crossed down over the 100, markets, continued down from there. And what I'm looking at now is, I think this area here is very reminiscent of where we are right now. And if you go back to these time frames, there were some healthy bounces in here. So there were some healthy relief rallies. That one was 51%. Another relief rally right here of about, let's see what that looks like. This one right here was 40%. And we had the other one right here that is 26%. So you had nice, healthy relief rally bounces all the way down. And every time this 50 would cross up to the 100 and get real close and then go right back down again. It would come up and then go right back down again. So we've seen that multiple times. And that's one of the things I've been tracking, is you could be facing that situation here where 50 crosses up and then immediately goes down, and markets contracting off of this bounce here, which was about, from this point here, a 28% bounce off of this recent low here. And there was a bounce here off of that range low of about 38%. So you can see these relief rallies that you get along the way as the market continues. And then if you look at this moving average on the weekly, we've looked at this before. Let's look at it on log scale so you can see a little better. Price is playing with this 50-week moving average and is below it. Whenever price has lost the 50-week, it's gone down to check the 100 and then ultimately down to the 200. And we've seen that multiple times throughout Bitcoin's history where it loses that 50-week moving average. The other thing that people are looking at is the moving average of the, let's see, let's look at the settings here of the 50 and the 20-day. So there's some people that are talking about the 50 and the 20-day cross. So let's take a look at that and look at anytime the 50 and the 20, maybe that's on the weekly where that happens. Yeah, the 50 and the 20-day weekly cross here where the 50-week crosses down, or the 20-week crosses down below the 50-week, and looking at Bitcoin's history where that's happened. And if you look back here, back in 2017, 2018, the 20 crossed down below the 50, and that indicated your big drop there. Same thing over here, March pandemic sell-off. And if you go back into 2014, same thing. So a lot of people are watching that 2050 cross right now in terms of what happened after that. And price went down and checked the 100-day every time after that happened in the past, except for in the beginning back here in 2011. Wasn't enough history on this moving average back then to do the job. Let's go back to the daily. Let's look at the Gaussian channel. We were talking about this. Price is back. Bitcoin is back down into the Gaussian channel on the daily. It was above it. So anytime it's gone above in the past, usually it'll stay above. If it stays above, it can have a nice little rally and a nice little reaction every time it's done that. So where can we look at this scenario here where price has kind of peaked up and fallen back down in, and what does that look like? Obviously, back in this area of 2021, price jumped out for a while above it, fell back in, went back down to the bottom level of the channel. Same thing here recently in 2021. And then if we go back and look over here, back in 2020, price popped out for a little while, dropped back in, went down and checked the bottom level of the channel. After it went back in, popped up here, went back down, only checked the midline here, popped up here. This was before the March 2020, dropped back down to the lower line. And then we have a couple of examples right here back in 2019. Again, after the 2019 mid-cycle rebound, price was about 14,000. It popped up just briefly and then went back down to a more consolidated bear market cycle. And then after the sell-off, again, this area here kind of reminds me of where we're at now. This was the 2017, 2018 bull market and bear market following. Bitcoin popped up out of the Gaussian channel on the daily for a little bit, then went back down in there, dropped significantly after that. That was basically a 42% drop on that one. And then it popped back above here and dropped back down and put in about a 30% drop and then continued into a longer bear market before a final capitulation. So what it looks a lot like potentially the way Bitcoin's been acting after this recent high that we had in November of 2021, it kind of has been reminding me of this. I've looked at this December or this 2017, 2018 bear market after that 2017 peak, and that kind of has been something I've been watching because it seems like this is the kind of trend after this big drop right here that Bitcoin had, and then it had a nice rebound, and just kind of continued its way down until it got to a final capitulation. And this was over basically 1 year period. So it took a year to get to that final capitulation. And if you look at where we are from November of 2021, you had that initial drop, kind of like we did back in 2017, and then had some serious bounces. Now price has been trending upwards a little bit where it was trending more downwards back then. So we'll just have to see how that plays out. And obviously so far, this has only been going on for a few months. Right now, about 147 days that we've been in this trend right here. And then again, when you look at the peaks of Bitcoin, they've always come in. This one was November of 2021. Then the last peak obviously was December of 2017. So 4 years earlier. 4 years prior to that was November of 2013. So your tops have come in every 4 years, November, December, November. So, And the Pi cycle top indicator actually puts the peak in April of 2021, but obviously the all-time high came in right here. So those are the things that I'm looking at right now. We'll just have to continue to see how things play out. We have the Bitcoin conference going on right now. Last year, Bitcoin dropped considerably during the conference. And I know there's a couple of large buyers out there, but they're not significant enough to prop up the market long term. You need much more capital in the market. With Bitcoin being almost $1 trillion asset, it takes a lot of capital to move the price. But low liquidity, not a whole lot of coins for sale. So a little bit of money can move the price here and there, but not sustain it. You need a lot more liquidity coming into the market, a lot more capital coming into the market to drive price. So that's where we are. The other assets, altcoins are following Bitcoin and everything's dropping right now. You get your random coin here and there that'll pop, but your large cap alts and your major alts are all following Bitcoin right now. So we'll just have to keep our eyes on that, see how the conference plays out, watch the global geopolitical environment, macro events, and wait and see what the real impacts are on the markets of all of these things that are playing out. And I will see you on the next video.